So, hello, and a massive hello to everybody. Hope everybody's having a great day wherever you are, whatever you may be doing. So, 50 pips in the house, rocking and rolling. No trade calls, no recommendations. Every response for their own stuff. We're here for educational purpose only. So, again, just having a chat. As usual, no real timing, no real schedule on this. I'm more than happy to talk through the charts, talk through what I'm seeing. If anybody has any comments or any questions, don't hesitate to ask. Don't be shy. And if you have any chart you want me to review, just post it in the comment section, in the chat section, and I'll go through it. As usual, again, I'll keep on going as long as we get questions. So I'll go do a little bit of a brief overview and then keep on going as long as we have questions. Kicking it off, where are we? So basically, we're at an interesting location in the market where we had hey Knut, how's it going, man? We've had good to see you. So we've had a decent move higher, and it looks like we're seeing a little bit of a stall, right? As it makes sense. Now, keep in mind, today is OPEX. May OPEX tends to be down recently, so it's not a super bullish day. But what's been happening is, if you go through some of the charts, you've seen the European indices, which are the ones that were going cocaine angels, seem to be being the first ones to peak, right? So what you're seeing basically here is the CAC. So basically broke through those all-time highs and then struggled. And then we got that nice little sell candle here, negative reversal, then another negative day. And this is going to be key to see today how the weekly closes, because we could get a situation where here, once again, you've got a failed break above all-time highs and a little bit of a turn, right? If you look at Euro stocks, very similar, gone through, we had the all-time high here, pushed above, failed, got a sell trigger yesterday. And here the big question is, are we going to get a negative close on the weekly? FTSE through those all-time highs, working on a third negative day. Is it going to put in a weekly negative close or not? And then last but not least, if you're looking at DAX, through those all-time highs, negative close yesterday, and currently negative on the week. So we'll have to see what the flows do, but it looks like, we're seeing a little bit of toppy action. And usually if these triggers can hold, at the very least, you'd expect to see a move back, even all the way into this 10-week moving average. And you've got a very similar situation playing out on the US indices, which again are far more interesting, right? So again, looking at RSP, what's happening on RSP, so the equal weight, you've seen that basically what's happened is we had this reversal back down, and once again, it's stalling right at the 78.6 retracement of that move up. So, Elliott wavers, harmonic players are going to be very focused on that zone. But what's also interesting here is, remember, we've had that big ramp with a bunch of gap ups. And usually those are, it's weaker structure. And we've seen on that move also across the board, we've seen very, very thin volumes across the board. We had a lot of days recently where we couldn't even trade 1 million E-minis during the RTH session. We had less volume, or like similar volume to half-day trading days. So fairly pathetic. When that happens, the squeeze can be brutal. But when it stalls, usually you tend to get a quick flush, kind of those stairs up and then elevator down. So this is something which I would be, again, focused on, with meaning, risk to the downside on a little bit of a stall here. So that's the first thing which I would be keeping my eye out for, whether you're looking at the double top on ES, double top on NASDAQ, and essentially what has happened, if you think about it, we've had a situation where the market started the year pricing in, 7, 9, 2,000 million cuts, right, on nothing really. And then all of a sudden the market went through the realization that that's, maybe not, not too realistic. We got that reversal on the 1st of April, and then, bam, we got that move back down. Then we have Powell taking a potential hike off the table, and then the market has completely gone cocaine angel and gone right back to those previous highs. But essentially what has happened Nothing really, because the data hasn't been conclusive enough to signal the need for an imminent hike, and the data hasn't been conclusive to signal the need for an imminent cut. Now, we got the ECB saying they're going to cut in June, and then who knows afterwards, but just because they kind of like got stuck in with all their signaling. But really, the big risk maybe is on the Fed side, is that we're just going to be wheeling and dealing around with not the data not strong enough to justify a cut nor a hike, and therefore we trade in a super broad messy range. That's something you have to keep an eye out for. But clearly here, to keep it extremely simple here, you've got this kind of box, and this was the max panics on possible hikes. And here is the rip on we're going to cut. So unless we actually cut, or unless we actually hike, it wouldn't be surprising to see us broadly continue to chop around in this area, right? Now, something which we discussed also in the daily webinars, which we're focused on this week, is we saw that a lot of the FX pairs, especially in terms of dollar and stuff, had moved to weekly extremes. And if you look at it statistically, whether you're looking at a lot of different metrics, it's unlikely that we would have pressed higher. So we're looking for an opportunity to try and fade this move yesterday. And indeed, you see that everything kind of stalled. And especially if you look at the DXY, you're seeing we're just still continuing this rotation higher. We're still kind of stuck here currently in this 106, 103, 100 range, stalling at the top end of the range. But here, this could still be, just a move inside this channel to continue the move higher back into 109 and the break higher. And this is really the key, because that especially on the stock side, things could remain irrational longer than you can stay solvent. Case in point, we got a little bit of action on GameStop this week. I'd just like to point out the way we talked about this also on Twitter. The weekly candle, this is not pretty, right? Not a pretty sight. But going back to more serious business, what you're seeing here is this is really the key, right? I doubt that unless you get a situation where the dollar can break substantially and aggressively below that 104 and take out the 103, or unless the dollar can take out the 106 and break aggressively above, that's probably that trading range which we highlighted on the ES, and just look at it as a broader chop inside that range. And this is really the key. This is really the key. And especially if you're an equity bull, you need to be worried about this, and you want this to break down as soon as possible. So case in point, as we said, things could be irrational on the stock side, but if you're looking at the dollar, and especially on the bond side, things to be a little bit more mature, right? A little, let's say, it's a few more adults in the room. And you can see here where we are, whether you're looking at UBs, ZBs, ZNs, it's exactly the same thing. We're looking at this move here into those highs as a sell opportunity to get back on this move. And here, the key is going to be how we trade around the 123. But you can see that we're still respecting, right, the opposite of that move we've got on the dollar. You see you've got that sell trigger, ZBs, right into the top end of that range, sell trigger yesterday, ZNs right here. So what you saw yesterday is, for the first time in a while, everything triggered at the same time. You got the bonds triggering a short, the dollar triggering a long, the stocks triggering a short. So that's the key question here. Can we follow through? Can we get some traction on what started to trigger on Wednesday on the European side, and what's triggered yesterday on the US side, for a continuation of, bonds lower, dollar higher? That's really the key thing to look at here. That's the key dynamic. Of course, we're going to be going into a week where we got a lot of bond issuance. We're going into a week where we've got NVIDIA, and that is going to be key. But that's that's pretty much where we are, right? That's pretty much where we are. Other things people like to look at is usually gold. People tend to ask for gold, and gold is kind of stuck here, right? Not an awful lot going on. This is that kind of, going back to that kind of box and we're just wheeling and dealing here, nothing much going on. Unless we break out of this box, this is still going to be fairly choppy, even though, of course, this is a very, very bullish breakout. You can see even on the weekly how the retracement back into the 10-week held, and it's trying to extend. And the other thing a lot of people look at is ask about is crude and what's happening on crude. Well, basically here on crude, you've got a hold here, an aggressive long trigger, and the market's trying to hold this base. So really, you don't want to be short crude on a Friday, but as long as this holds, market's going to be looking at this level, and we're back at that 80, which we've been discussing a lot. And really also here, you've got this kind of 80 to the upside and this sloppy kind of bottom here that unless we break outside here, much to do about nothing, very choppy. Daily close, weekly close above the 80, that should open up another rip, and a day close, weekly close back below. This could mean a possible flush, even all the way back down into 70. So once again, we're in a situation where the market is setting up these broader ranges where even though people get excited on some of the data points, on some of the central bank commentary, it's not enough to give the market a clear indication of where we're going to go with rates, and that's what everybody's focused on now. And until we have a clear indication, chances are we continue to chop around a little bit, and that's the risk I see, is that we continue to chop around a little bit. And I think here people which are likely going to suffer the most in this kind of market is people that are desperately trying to catch a super big, 10, 15% swing in either direction, whereas most likely the play here is to continue to trade nimbly inside the range and then try to get onto that swing once you've got more things gelling and more importantly volume coming in and a real catalyst to play for that move. That's pretty much the way I'm looking at things. Those are the key things. I don't know if anybody has any question, any chart they want to look at. Again, I can't. I was debating about whether to do this because I don't think there's much. The situation seems to be fairly clear here and fairly simple. And things are moving back in sync. So I think if I say so myself, I think that's a fairly decent overview of where we are. So again, if anybody has any chart they want me to look at or anything specific, I'm more than happy to talk through any trade, any question, even not chart related, more than happy to take it. If not, that's pretty much where we're at, guys. Euro, okay, sure. What's going on the euro? Here you've got, euro in a certain, it's going to be very similar to that dollar, right? And you could see that we're stuck here. Now, the big question, again, is shorter term, this is likely trade with risk. I think pretty much everybody has priced in or is looking at, June cut for the ECB as a done deal. And the recent thing they've been saying is basically, okay, June's a done deal, but then probably no more. So it's kind of buying time. So the big question, Knut, is this putting in some kind of a top, or is this putting in some kind of a base, right? Chances are, unless you get a strong and sustained move from the ECB, this is just going to react and play with risk, okay? So it's kind of like what you saw in the BOJ, right? Everybody getting excited, but once the BOJ comes out and they just do one hike and the next hike isn't coming until September, October, unless they commit to a full hiking cycle, chances are that the dips keep on getting bought and that this is the path of least resistance. So here equally on euro, the risk to the upside is if the ECB should be looking to change or give you something more concrete. But if it's just one cut, and it's a tricky one. But as long as they're cutting and the Fed isn't, you would expect it to to struggle to keep on pressing higher. Right now, the way I'd be looking at it is this is probably still the predominant trend. The risk will be, what happens if they cut and then they have to hike? I don't know. But right here, it looks like what's happening on the ECB side is likely very much priced in, and the market is just going to be trading on the Fed. And the risk is that this is trying to play out, right? And if you can see what's that, that's that same move that you're seeing in the bonds, and that's the opposite move that you're seeing in the dollar, right? So it's all the same trade. I think if you're looking for something to do here, if we get daily closes above these recent highs, then there's a good chance that you're going to see this trying to swing and flush back into the 110. The tricky thing is the stops are likely not above the 110. They're likely far higher. And equally here, on a day close below that 10-day moving average, that 200-day, that 50-day confluence, and especially if the market is also getting sold, then there's a fairly good chance that as that dollar tries to rip across the board, as those bonds continue to unwind, then this is likely going to try and continue this channel and come right back into the 105. But here, I think the key, once again, are the bonds, right? It's what's happening on the bonds and therefore the dollar. As long as you don't see some aggressive selling coming back in the bonds, it's going to be hard for this euro to come back down, and it's going to be hard for stocks to come back down, right? Essentially, that's what I'd be focusing on. What's going on the NASDAQ? Well, the NASDAQ is exactly the same as all the other indices now. The thing to keep in mind is that, of course, we've got NVIDIA reporting next week, so we'll have to see what gives. But right here, you've got a double top, negative close at highs. My pleasure. So the risk here is to see a little bit of a reversal, a little bit of an unwind back into that 10-day moving average, right? So here, as we're hovering, this remains that 18,000 remains a key pivotal zone. And right now, you're kind of like in that similar box we discussed earlier with on the ES, right? And unless we get some real clarity, chances are we continue to chop around this box. So where's the asymmetry? The asymmetry is looking for tight shorts here or looking for tight longs at the 17,000. And then essentially, what you've got is that 18,000, which remains mid and which is likely going to continue to be pivotal for Momo. So that's the way I'd be looking at it. Negative close here, the place to look for a reversal back into this level, this confluence of these moving averages. As long as these keep on getting bid, then chances are it's going to try and press higher. If those go, then the Momo switch could be at the 18,000 for a flush back into the 17,000. But again, we'll have to see what happens next week. We've got NVIDIA. It could be funky. We'll have to see. In terms of NVIDIA, likely chances are that if it beats, we rip. If it's in line, we rip. And if it's bad, then it gets a little bit uglier. But we'll have to see. Any other comments, any questions, any chart anybody wants to look at? Again, don't be shy. Happy to look at anything we got on the platform here. And just keep in mind today, it'll be interesting to see. It's not a crazy OPEX day, but tends to be a little bit negative. Most interesting is going to be how we trade on the how the weeklies close across the board, not only in Europe but in the US too. What's going on cable? Cable, again, they're all going to be fairly similar, right? But you see how we're kind of similar pattern to euro. Only this is being a little bit heavier. But right now, seek note, it's exactly the same thing. Is what are we topping or are we basing, right? All the moving averages are flattening out, meaning there's absolutely no trend. We're in the big chop, and really even here, I think nobody really cares about the BOE. It's just going to be a question of, what the Fed does, what risk does in general. And right now we've got essentially two big markers, and that's essentially, the 129. $129 and $123, the market's telling you fairly clearly, look at this, to the pip, pretty much $129 holding $123. So those are the lines in the sand. So here, especially in this location, you see you're kind of like in the mid of this broader range with all the moving averages flattening out. Here, you could be looking for some tactical intraday trades, but bigger picture, this is a little bit messy. These are the locations where you get the least bang for your buck. It's the hardest to risk manage because, as we like to say, you don't want to be confused by velocity of move inside range. It could be very messy. Any comments, any questions, any other chart anybody's looking at? I mean, while we're looking at it, Aussie, you see you've got a similar kind of situation here. It's just kind of stuck, trying to break higher. You've got a lot of support to the downside, but still flat, not doing much. It's still pretty much a wait and see across the board. Kiwi, again, is this trying to respect this downside move, or are we going to rip? But, everything's still a little bit in limbo. One of the interesting charts also is CAD here, because it really looks like you keep on getting buyers in this whole zone, 136 zone. And here, especially if we take out these highs, this could be a very, very aggressive break. So that's something I'd be watching. But you see it's messy. There's no specific level to the upside, downside every time we come down, even though the bids are coming in. You've got these long wicks at different levels. It's extremely messy, right? And again, it's not surprising. It makes sense that globally speaking, Forex will be kind of stuck here, until we get some kind of clarity in terms of rates from the various central banks. And as long as everything's messy, no real reason to see any aggressive moves or any aggressive trend move. Okay. Any comments, any questions, anything anybody's looking at, anything we want to discuss? I think here you've got a lot more asymmetry, a lot more interesting action in the bonds and in indices than in FX right here. That could change, but for now, I think those are far more interesting. Okay. Good stuff. So guys, thank you so much for stopping by. Let's see what we get. Wishing everybody an awesome Friday ahead, an even better weekend ahead. And, let's see what gives, okay? Thank you for stopping by. All the best, guys. Bye-bye.